Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1174th edition of Short-Term Trading Live with Oscar. Good evening, traders. This video is being filmed on Tuesday night for trading Wednesday, May 14th, 2014. Remember, futures trading can be extremely risky. What are we looking at? E-mini S&P daily bar chart. Short-term target, which I showed you in last night's video, remains intact. Short-term target remains intact. We actually have higher levels, but 1914 to 1916 is the target I gave out, and that looks like it is on target to be met probably on Wednesday. So there's your E-mini S&P. Look at this one. Dow Jones Transportation Average. This is a very nice chart right here. Look at this. I say all-time highs posted again. Follow the leader, baby. Don't let anything stop you. Transportation average taking us home. We do know one thing about the transportation average. It had a characteristic of whenever it made a new high, it would do a nosedive, right? And I got us through three of those moves, right? Very nicely. I pointed out these three. We were able to see the market come off. Some of us actually capitalized using the E-mini S&P. This one didn't get there. This one we had a little pullback, but there's a difference now. This one's blowing through. So the likelihood is a few more days it should move higher before it runs out of steam. Let's talk about at least Wednesday. So that's your transportation average and your E-mini S&P. Of course, there was always a chance that this market could just turn around and dump tomorrow. So always, always, always have your stops in. We never ever trade without stops. It's most important that we place our stops before we get into positions. So that takes care of the indices, showing you that my targets are remaining intact for now. But let's look at something else. Another pretty interesting chart I think you're going to like. All right, take a look at this one. This is the gold chart. For the last couple of days, OMNI has been keeping us on the short side of gold. We are below the 200 bar moving average. This is absolutely a bear flag. We had the one day blow through volatility, but it closed within the bear flag. The next day behaved inside the confines of the bear flag. We expect another day to stay either inside of the bear flag or finally start to come off. That's what bear flags usually do. And being below the 200 bar moving average doesn't help the market at all. So if you hang out at livewithoscar.com, come to my free chat room. I will show you what we're going to do in gold and in the E-mini S&P for tomorrow. Remember that futures trading is extremely risky, can cause substantial financial loss, and is not suitable for all trading accounts. All right, traders, try to remember this. Always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, I'll see you at livewithoscar.com.